The dollar is getting absolutely destroyed right now, and a lot of people are wondering, with the stock market going up every single day, with cryptos going up every single day, breaking record highs all the time for Bitcoin and the S&P I'm talking about, some individual stocks might not be doing that good. One of the bigger questions that pops to mind, at least for some people, is that happening because they're actually going up? Or is it the dollar losing its value? Because I think we can all agree that we all know your dollars, your money right now will be worth significantly less 10, maybe 20 years from now. Well, matter of fact, every day you wait, theoretically speaking, it's becoming worth less. I always like saying that, in a strange way. Your money will become worth less. Your money will become worthless. I don't know. But really, when you take a look at the rise and fall of the US dollar, you just see from when the Fed was created versus now. I think it's quite obvious to see that we're not doing that good. Matter of fact, that $100 bill all those years ago, like 100 years ago, that's nowhere to be seen. And with also new record-breaking US national debt. Since we're printing so much, it's also quite logical that your $1 right now eventually should be worth like a penny, if you look further enough into the future. And one thing that I think is always quite interesting is that the median time of world reserve currencies has been about 95 years, So if you take all these numbers, 95 years is both the average and the exact middle. With the longest being 105 years and the shortest being 80 years, it begs the question, what's next? I mean, the United States dollar has been at the top for a little over 100 years. Could it be time for a shift? And that actually puts into perspective why the US growing debt really can't get any better as well. Fewer countries want to buy the United States debt because, well, if there's more and more instability because more printing, devaluing the US dollar, increased demand in terms of higher interest rates, and that kind of is like a little circle that keeps on going on. Well, by that logic, it's kind of logical they are afraid of something happening over there in the US, I'm not saying it's bound to happen soon, I'm just saying there's more fear than there has been over the past 100 years. Well, I mean, with some couple exceptions, but you get it. But saying that, there's a couple of things that are also quite interesting in the market right now. One is that people are finding more and more alternatives, and I should say companies and other governments are finding more and more alternatives to the US dollar. And we're partially also seeing that with international stocks, where usually the S&P would always be the shining factor. Well, actually, this time around, international stocks are very much outperforming. And to that notion, well, BRICS and a lot of these other groups have also started pushing themselves away from their reliance on the US dollar, pushing this further. And it begs for the question, is this really cyclical? Some seem to say so, that right now we are due for yet another boom in all these international stocks, a little bit of a recessionary time, where not actually the stock market were to fall too much, but just underperform, you could call it. And at the same time, the US dollar got rid of the gold standard, but gold is up, 70x or so since that has happened, and the dollar has only been falling. And matter of fact, Bitcoin, it's been doing pretty good, but that begs the question, like I kind of talked about earlier. Does the US dollar falling have any effect on our portfolios? Is that the reason all of our things are doing good, our crypto coins, our stocks and everything? Well, my answer would be no. There's never been a real good long-term correlation that can be shown between the US dollar and crypto, the US dollar and stocks. Even though very often they move in the same direction, I'd say it's almost always as likely for it to move in the exact opposite. And so all we can conclude out of this is that holding the US dollar has basically, throughout its entire history, been pretty garbage. Holding the stock market, holding Bitcoin, holding gold, holding other cryptocurrencies, all these other altcoins, has historically proven to be a very good idea. Regardless of US policy, regardless of how they handle the US dollar, regardless of whether or not the US is going to stay on top. If you look at gold, for example, right, they got rid of the standard. Maybe, just maybe, people saw that as being a negative thing for gold. No, it's always gone up over time. And that leads me to one of my most profitable strategies when it comes to trading over time. And there's actually two parts to this. One is I've got a whole series of bots for a lot of different cryptocurrencies. And all they basically do is whenever the price goes down a little bit, it decides to buy. And when that price goes up a little bit, it decides to sell. With the basic idea being, I think all these assets will go up significantly over time. So every single time it drops a little bit, I want it to buy. And every single time it goes up a little bit again, I want it to sell. Now, why does this work and why is this such a smart thing? I've done this throughout the last 8 years on multiple different markets with multiple different settings and kind of different crooks and annas. But the whole idea is, as long as the area that you're investing in, generally speaking, goes up, you're quite golden. And we can say that, oh, mustn't we be concerned that it's mostly US-based influence? Or that once the dollar gets stronger again, da-ba-ba-da-ba-da. No, the dollar is falling, that is a guarantee. We keep seeing that over time. History has shown that. But even if the US, something really, really bad were to happen, there's still a very high likelihood these companies, for example, the S&P, will actually still keep performing, at least for a very good foreseeable future, and that cryptocurrency prices, since they're not necessarily correlated to the US dollar to that extent, will also most likely just keep on surging. And again, unless there's a factor within the markets themselves, it's not something I'm too concerned about. Same for example, Trump's new bill, all these things, you might actually attribute them as something quite positive. But by the way, if you're wondering, those bots I've got over on Payonix, I've got a little link down below here if you want to also check him out. And I've also always got a video link down below where I basically go over why exactly I opened them, what my main strategy is with all this. Because again, I think it's the most profitable strategy that most people can go for over time. And previously, I showcased you guys a $4,000 to over $1 million portfolio basically that uses exactly the strategy I'm showing you right here. It's exactly this done over a period of about 3 years. And I also will tell you right now, if you keep looking back at this channel over the next few months, you'll just see it grow because ultimately, throughout time, both the S&P, Bitcoin, and many other things really have done well. And the thing is, as long as you do not think they'll go to zero, this can be extremely profitable. And I personally think that basically any form of investment is better than keeping US dollars. Now at first, when I was making this video, had a different idea. I kind of wanted to explain more so what's happening to the US dollar, more so what's happening to the stock market, and compare the two. And then as I was making it, I kind of realized, really, if you want to break every single part of investing down in a few different points, all it comes down to is don't get too caught up on the short term. Think about it slightly longer term. If you do not think it's going to zero, you're going to make a ton of freaking money on it. Second of all, really, sitting on cash is one of the worst things you can do over time. On the short term, it may help you out by being able to buy a dip, sure, but over time, it almost tends to never really be that big a deal. I mean, if you're getting yourself a 10% difference, but eventually that could be the factor between taking it, the investment, or missing out, is it really worth it over a 10-year period, a 1-year period, a 2-year period? Most of the time, the answer to that is no. Make sure you are diversified. I think that's another great point because any single one of these areas can have something pretty crazy happening to it. I mean, with currently Trump's new tariffs coming in, I mean, these specific days, a lot of new announcements are coming out for it. One specific sector, one specific area, something pretty crazy could happen for it. And if you're talking about really specific cryptos, there could be some sort of outbreak, right? Some sort of hack, something along those lines we've seen multiple times in the past that could really wreck that specific coin. Now, some coins have basically withstood the test of time, where every single time something bad happened, it really didn't do too much in terms of negative for the price. Maybe you can focus a little bit more on having those rather than ones that have shown to be even more volatile, especially when something minor happened. But hey, still diversification is never a stupid idea. But really, it all comes down to one crucial and very important thing, which is make sure to sometimes sell. Now, that is again, if you are a trader and you're a person that has no other thing going on. And why I'm saying this, which is kind of contrary to my earlier points, I personally think the best strategy out there is basically buying and never touching it again for most people. Why? Because you're almost guaranteed to make money. Not financial advice, but almost guaranteed to make money over time. However, I also think that you're wasting a ton of the money you can make, a ton of the opportunity by never touching it. Why am I saying that? Well, If you're never touching it, your money is going to go up slowly. Over a period of 10 years, maybe you're going to 10x your money, which is amazing. But theoretically speaking, by touching it a little bit here and there, by taking some of the more massive swings, it can be quite easy to take advantage of major cycles and the S&P, right? Major stock markets, or in just the crypto market. They've been very obvious over the past few years. And again, you don't have to fully exit a portfolio, but throughout those cycles, it could be wise to slowly get in, slowly get out. Or again, like I've showcased you here with just one of my examples, I do it in an easy way through some of my bots. Again, what they're basically doing is buying and selling all the time, cashing out these great profits, as you can see right there, while at the same time just keeping my position open for the most part. Again, this profit, for example, on this bot right here, it's just from doing nothing, just waiting it out. The unrealized profit part, that's again from the prices of our trades basically going up. So these are two separate parts, which are significantly different than just some of my trading positions here that I've got open. Here you can see a $700,000 XRP trade. I just have this open doing nothing, just a buy once and wait, which is still different though than just holding it in spot. But again, it depends on what type of different investor you are, and what type of different trading you like to do, what type of strategy you've got. For most people, I think the buy and hold is easiest. Just buy it once, don't touch it. Look at the news for in case you want to really add some more based on something you like, or take some out and diversify because of announcements, things of that sort. And of course, it's wise to keep yourself up to date with your investments, Then one layer on top of that is people who, have a good portfolio on the one hand, just spot, just holding it. And then on the side, they're also doing some sort of trading. Again, what I basically have here is I had a lot of cash on the side. Let's just say we have, for example, $1 million in our account in cash we have left over. Well, it's basically sitting there. And all I care about is seeing the dollar value of this account go up over time, right? It's either had dollars or I have some of these positions, which are basically contracts. That's what you call them. I buy these contracts with the idea in mind that I will buy them, I will wait for them to be in some profit, and whatever I can take from that is cash flow. That's what I call it. So again, the core idea is not to have these positions open forever, because that reason, if I want to do that, I could have just bought it spot. I could have just had it. I do it with some leverage. Why? To make more use out of my dollars for the short term. And because, like I said earlier, it's quite hard for most people, about 90% of the people, maybe probably more, to play this trading game with their full balance. I always say there should be two parts. One is something like a trading type of account here, like you're seeing right here. And on the one hand, just an investment account where if your thing is not being a full-time trader, right? If that's not what you like, that's not something you want to do, just keep your coins. With, on the one hand, the spot, the holding, the idea there, if we're talking the S&P, if we're talking crypto, it's to get as many units, as many lots, as many cryptos basically as possible, many coins. And on the opposite side with trading is just the dollars you care about. And the reason I say they're two different things is because if you take a look at the S&P, let's just say one lot, okay, let's just say one unit that you can purchase, the smallest one. It's really, really small, right? Let's just say one unit is, we'll go here for $6,225. So if you had $6,200, you could buy one unit right now. In 100 years, you'll still have one unit, but probably it's going to be worth what? 40,000. No, okay, let's say $1 million at that point, right? If you were to buy, sell all the time, well, eventually you might go from that $6,000 to $10,000 over a time span, over a few months, a few years. But maybe if you then try to buy back your one unit, your lot, for example, maybe at that point it would actually only buy you 0.8 because the price of the S&P will be at whatever, let's say 15,000. So even though you did well, you were able to trade it all the way towards 10,000 bucks. That is then your balance, whereas the one lot, if you would have just held it, it would have been 15,000. And that's because a lot of people, they can trade well on the short term, but still not outperform the main asset. But then again, if you see it from the perspective that you did this with a section that was in dollars anyway, which is besides your longer term investing, then it could be quite nice because, well, if you had $6,000 before and you're like, you know what, I want to speculate on these prices right now to basically make some more dollars out of it. Again, it's a different idea, it's a different mindset, it's a different strategy. And that's also how I think more people can stick to it, but it being a different strategy. You're not caring so much about the overall value over time. All you care about is, hey, did I get a good entry? And if not, will I be able to eventually sell this for more? Yes or no? Whereas, like I said before, all my holdings, every single one of these, I think will go up over time. But on the one hand, I don't really care what happens on the day-to-day, the week-to-week, the month-to-month. I care about where my coins will eventually, my stocks will eventually be worth. And on the other hand, I care about giving a good entry. But even if you don't, All I care about is, hey, will I make more dollars out of this, and will it beat inflation? Will it beat a high yield savings account? That type of stuff. Well, over time, it's kind of proved it will, especially if you got some juicy strategies, and one of the ones I'm using is bots. But theoretically speaking, all you gotta do is just manually insert orders where, again, your trade will basically add up every single time it goes down lower. Here you can see I've got, for example, some more orders laid out for in case the price starts dropping, but this can be a lot of work. But then again, throughout history, this has never failed just quite yet. All right, all these major cryptos, stocks, major indices, it's always worked because the general direction is up. And we can start sitting here about which area would outperform. Oh, maybe international stocks are better. Well, all we know is the dollar, usually, it's a downward sloping thing, right? It's going down in value. So everything is better than that. If it's going to be international stocks, if it's going to be the major index, if eventually the world reserve currency is going to shift, all that really does not matter that much for our profit. Again, you might add that the stock market, as in the S&P, will eventually be wrecked by the US dollar losing its value. But again, that's quite hard to say because it's all denominated in USD. If eventually the US dollar becomes worth less, to some extent you might say the stock market looks to become worth more and more and more. It's really only if America itself starts kicking the bucket that many of those companies would do bad. But then again, they're so international and they're so influential that you might then also point out that many other countries' economies would actually get wrecked if things like Apple were to fall away. I mean, if you take a look at freaking Vietnam or whatever one of those countries' exports to the US. That's why tariffs were such a big deal, because they all work together. So just only playing on that card, I don't think also makes too much sense. And if you're wondering why I made this video a bit more central about stocks, crypto, and everything, it's because I've been buying so much worth of stocks over the past couple of weeks. I actually made a video outlining my purchases and how I'm doing all that like a week or so ago, talking about how I'm buying stocks, oil, and all that stuff over on Bybit. And I realized a lot of crypto people, they're only into crypto, but the stock market's kind of similar and the gains are quite severe. Really, all you have to do over time is just buy like a freaking madman, have a little bit of a crazy mindset of, well, if you maximize it a bit to the edge, where if you look at the worst performing day of the S&P ever, minus what, 20-30% or something like that, as long as that does not wreck you, if you can keep your leverage to a level where that does not wreck you, or you've got orders in place to not let that wreck you, you're golden, even with leverage, to just make money over time because they've always gone up. And you might be the person to tell me, but what if that changes? If that changes, I'll take my loss. All right, the moment the S&P or Bitcoin goes to zero, I'll take that on my chest that I lost. But I still personally think the probability of both Bitcoin and the stock market going to zero, right, the S&P, the major index, are quite low, and I'll take my chances on that. Every single time it dips, that's fine. Again, with my strategies here, that's perfect. We're making money on that. All I care about is them not going to zero, because at that point, I do have a bit of a problem. I do. I'll admit that. At that point, holding your dollars becoming worthless would have been a pretty good idea. But you know what? Like I said, I think 99% of the people watching this would rather make millions of dollars in the process, just with the risk that the major S&P and Bitcoin were to actually go to zero, because it only needs to be right for what? 1 year? Not even. Right, to make all the money back that you could ever lose. Theoretically speaking, if we start with $1 million right now, I think most people will be able to flip that into, let's say, $3 million over a bull market, right? Or a few year period, let's say a 1 year period. Eventually, if they've got 3 million, they take the 1 million out that they eventually would. I mean, your 1 million would be worth a lot less in dollars anyway, and then just go with the rest. But again, in my personal opinion, stock S&P going to zero is such a small chance, you might as well just wing it. But yeah, you know what? That's not finished advice. Those are just my thoughts. Point of the video, stocks, pretty good. Bitcoin, crypto, gold, all pretty good over time. Hard to lose on those. The dollar guaranteed loss. Might as well make more use of every single opportunity. I do it with bots, as I've talked about 1,000 times on the channel. You could do it by just basically buying any single one of these basically every single day consistently. And if you don't want to buy every single day, buy once and then have a good strategy for buying dips and selling, actually, to make sure you're liquid to some extent, because it's never lost. And this is just one thing. I wish somebody sat me down 10 years ago. Okay, maybe a little bit more than that. A little bit over 10 years ago, I had sat me down and told me, hey, if you just buy any one of these, just keep on buying, you'll become a billionaire in 40, 50 years, something like that. If you just keep going. 50, I think for most people it take, let's say 75 years, depending of course on how much income you have. Even with $10,000 a month, right, which is a lot of money, I get that. I'm just saying with that low an amount, it's a lot of money, but I'm just saying with that low, let's just quickly see. Yeah, just for fun, right? I decided to insert it here. If we take $10,000 of an initial investment, monthly contribution $10,000, which again, I know it's a lot, just bear with me for a little second. We say the length of time is 60 years. So right now, let's say you're 30, at that time you're 90, like Warren Buffett age. Well, we could put 68 there, but anyway. Interest rate about 12%, which for a savings account, obviously, no, you're not going to make it. But the S&P has definitely returned about 12% a year. We put 5% on top, 5% below with a monthly compound. If we take a look at this over time, right, you can just see it for fun. Just follow it along. You can see that just future value of 12% a year is $1.3 billion. That's again with $10,000 a month, which once more is a lot of money over time. I know. But the fact that you'll become a billionaire over a 60-year period, it's like, to people, billionaire sounds impossible and crazy. It's just the time thing. Everybody can get rich over time. All we aim to do, especially on this channel, is do it a bit faster. Because again, every single person in the last 100 years who's ever invested would have gotten rich over time. Even if you were only able, let's for fun at this, right? So we start with $200 and we add $200 a month for the last 60 years, which again, pretty long time, but hey. Even if you only added $200 a month for the last 60 years, you would still have been at $26 million right now. So again, you did this when you were 15 years old back in those old days. Now you're 75. Still sitting on 26 mils. I mean, I know $200 was way more at the time. Probably impossible for somebody to do that. It's to give an example, first of all, of how the dollar loses its value. But I mean, it's lost a lot, but it's not lost everything, right? Then again, over this past 100-year period, when you really start adding it up, it still just makes sense to invest. I just wanted to quickly bring that example to light, that a lot of people never think they could ever become a billionaire just by the idea that it sounds so far away. You have to make all these products, you have to make this, that. No, $1 billion, really, it's not out of reach for a lot of people. And again, maybe for billions of people, it is out of reach because they do not have $10,000 a month to invest. But probably even from watching this video, maybe you are not at that point yet, but every single one of you can eventually get to $10,000 a month. It's not that hard, all right? It's not impossible at all. Again, maybe not in your current environment, but I don't think anybody can tell me right now that $10,000 a month sounds impossible. Like there's no way they could do it. Like your whole family is about to get crushed by a boulder unless you make $10,000 a month. And you're like, oh, and you've got, let's say, 5 years to do it. You're like, no, it's impossible. No, it might be hard, might take some strange strings, but it's possible for sure. Anyway, just my point here to showcase. Over time, it's just we're trying to beat that time, right? We're trying to do it a bit faster than 60 years. For one more last example, I decided to do $1,000 a month because I already can see, I can smell the comments, right? So $1,000 a month. For about 25 years would still result in $2 million. So if right now you were, for example, 25, once you're 50, you'd have $2 million in your account. $1,000 a month, right? If again, we do this at 60 years, which I know is a bit too crazy maybe for some, let's just do it for fun. That would get us to 130 million. I think my case has been closed. Again, if you get really, really good markets, you get 17% a year, you actually get to 1.8 billion, but you know, we cannot expect that. On the lower end though, if you do get 7% returns a year, my savings account's also like 5% a year. So if we do this a bit higher, we actually put this to 7, there we go. If we were to get 5% a year, you'd still end up with about 5 million. But in the opposite end, if you get 19% a year, you can see 5.3 billion. But at that time, it will not be worth as much as it is right now, though, because that's 60 years into the future. I mean, AI is already going to take over in like 5 years. But you know what? That's about it for right now. If you also want to trade, I've got some links down below. And that's about it for today's little thought experiment.